Coinbase, the world's second-largest cryptocurrency trading platform by volume, is giving hints that it may sue about 1,000 users in the Republic of Georgia for taking advantage of a pricing glitch. Only 0.001% of the people who use the US company are in this group. Starting off, whose fault was this? Coinbase told CoinDesk at the time that the glitch was caused by a third party but did not name the company. In this way, the event shows a worry that financial regulators have had for a long time: the dangers that institutions face when they work with outside groups. Last week, U.S. Comptroller of the Currency, Michael Hsu, said, "When everything is done within a bank, we know exactly who is accountable when things break. Risk can get lost. When work is split between an institution and fintech startups with different business models, though," a company spokesperson said that the amount of money Coinbase lost because of the problem in Georgia, which the company wouldn't say was irrelevant, still, a Coinbase spokesperson told Coinbase in a written statement that the company is working with the law firm Giovinazzi and Partners to help get the wrongly credited funds back. "We can't say what's going on with specific demands or lawsuits," the company rep said, "but users who return the wrongly credited funds won't have to worry about any more legal trouble." The host of the Georgian TV show Crypto Bazari, Avtandil Kachava, told Coinbase that his team had heard from about 470 people about the situation. Kachava estimated that people could have made tens of millions of dollars trading with the wrong lari rate. That day, ATMs in Tbilisi, Georgia's capital, ran out of cash as traders rushed to cash out their huge profits. For example, one Bitcoin was going for 5 million to 6 million lari, or about 1.7 million US dollars, while the average price in late August was only 55,000 to 60,000 lari. Well, crypto experts at CoinDesk talked to 4 traders who took advantage of that pricing glitch on a group video call. All of them said that their bank accounts were frozen for a short time after they sold crypto for lari and deposited cash. After a few days, the bank accounts and cards were unfrozen without them doing anything, but on September 24th, all 4 users got emails from Giovinazzi and Partners saying that Coinbase is determined to use any and all available legal means to recover improperly credited funds as soon as possible, and warning that legal action could be taken against them if they didn't respond to the email and return the money. Coinbase did not say if the exchange had asked the Georgian banks to freeze the accounts of traders. The traders said that at least 2 of Georgia's biggest banks, Bank of Georgia and TBC, froze the accounts of the people who used the bug, but then unfroze them. One user who talked to Coinbase, a manager at a Georgian tech startup named Tornike, who didn't want his last name used, sold some Stellar Lumens, XLM, on August 29th while on vacation in Grigorleti, a small resort on the Black Sea. He put his money right back into his Bank of Georgia account and went to an ATM nearby to make sure the money was still there. It was, but Tornike said that a few hours later he tried to buy some wine at a nearby store, but his debit card was frozen and he couldn't pay. Something changed after 3 days and Tornike could use his bank accounts again. A news site called Blockworks talked about a text message that one of the traders got from their bank: "Hello, we have flagged your Coinbase transactions as suspicious and we're locking all of your accounts and cards," says a text message from one bank to all of its customers. "Please be aware that Coinbase could ask for the money back. Sorry." CoinDesk asked both banks for comments, but as of press time, neither had replied. Giovinazzi and Partners didn't answer either. This is not the first time such an incident has occurred. December last year, Coinbase glitch lead users to think they'd struck it rich. Users of the cryptocurrency exchange Coinbase and the cryptocurrency data provider CoinMarketCap got the biggest surprise of their lives when they checked their accounts and saw huge gains. Some thought they had become millionaires until the company said on social media that it was a glitch. This comes a week after some Coinbase users started a campaign to force the company to give their refunds after a glitch in the system in mid-November, reportedly locked some customers out of their accounts and kept them from trading for weeks. Binance and other cryptocurrency platforms have also had problems with trading. In November, the platform stopped some users from withdrawing Dogecoin. This made Tesla CEO Elon Musk challenge the company, saying that investors should be protected from mistakes that are not their fault. Binance said that the problem was caused by a problem with the most recent Doge wallet. Binance is also being sued by hundreds of users who want compensation after a bug locked them out of their accounts in May and stopped them from trading. A November Pew Research study found that 16% of Americans have invested in, traded, or used cryptocurrency. According to CoinDesk, the prices of all cryptocurrencies went up. Bitcoin went up by 2.2 9.56%, Solana by 2.58%, and Dogecoin by 17.03%. In November of the same year, Coinbase customers demanded refunds over GYEN stablecoin glitch. Users of the cryptocurrency exchange Coinbase are so angry that they've started an online campaign to get their money back. This is because a technical problem caused the company to freeze accounts for weeks, which could have resulted in big losses for many customers. In mid-November, Coinbase told customers that a problem with trading two cryptocurrencies was due to technical reasons. Now, many of these customers are angry that the exchange locked them out of their accounts, and they say took their money in an unfair way. Midway through November, Coinbase customers were able to buy Gen, a stablecoin that is worth 1 Japanese yen. This is when the problem started. Power, POWR, a cryptocurrency that was meant to be used to trade energy, was also involved in the mistake. The dispute shows how risky it is for the millions of small investors who are jumping into the new cryptocurrency markets, which are not yet regulated and where the rules of the road and the relationships between exchanges and customers are still being worked out. And it shows that stablecoins, which are advertised as being tied to outside assets to avoid the huge price volatility of other cryptocurrencies, are not always as stable as their name suggests. Chainalysis, a company that analyzes cryptocurrency, says that Gen was added to Coinbase for the first time on November 10th. Around November 17th, the coin stopped being tied to the yen price it was meant to be aiming for. Chainalysis says it jumped to a high of 0.065643, which is about 7.5 times higher than the fiat equivalent investors thought they were getting. Chainalysis says that the number of transfers to Coinbase picked up on November 18th and peaked the next day at $122 million. On the other hand, the company says that most transfers came from Coinbase on November 20th, with 84% of all transfers coming from Coinbase on that day. It's not clear how many customers were involved, how many lost money, or how many took advantage of the sudden rise in price and sold before it fell again. Finally, a bonus, Binance's BNB cryptocurrency was hit by a massive $100 million hack. Every day, there's a new crypto hack, but this one is big. A hacker stole nearly $600 million worth of the cryptocurrency BNB, which is issued and managed by the popular cryptocurrency exchange Binance. The hack happened late on Thursday, and security experts like Sam CZ Sun and Igor Igamberdiev looked into it and wrote about it. According to Sam CZ Sun, the hacker did this by getting a cryptocurrency bridge called BSC Token Hub to send them just over 2 million BNB, which was worth about $586 million at the time. Here's a quick rundown of what's going on. BSC, or Binance Smart Chain, is a platform for running decentralized apps with cryptocurrencies. It's similar to Ethereum in this way. Binance's digital currency is called BNB, which stands for Binance Coin. Think of it as Ethereum's Ether. And a bridge is a project that lets you move money from one blockchain-based cryptocurrency platform to another. Sam CZ Sun's analysis shows that the attacker took advantage of a bug in the BSC token hub to forge arbitrage, which let them mint BNB coins out of thin air. Soon after, Binance CEO Changpeng CZ Zhao confirmed the hack. A bug in BSC token hub, a cross-chain bridge, led to more BNB. We've asked all validators to put BCS on hold for now. The problem has been solved. Your money's secure. We're sorry for the trouble and we'll let you know what happens next, he wrote on Twitter. CZ says that the current impact estimate is around $100 million, but Sam CZ Sun says that the amount that was stolen is much bigger. This is backed up by actual transactions on the chain. The difference in numbers is probably because Binance is talking about the funds that the hacker moved to other chains or made inaccessible in other ways. Well, that's it for today, guys. Hope you enjoyed the video. Till next time, cheers.